Okay, just give another 10 or 15 seconds and we'll be there. Pop out the chat. Just want to make sure that I'm going to see all the questions asked by the audience later on. Okay, perfect. So welcome everybody. We are live, and I got today a special guest with me. We have Lars von Thienen. Lars von Thienen is the founder of whentotrade.com. He has been a proponent and a heavy user and a student, a scientist, and whatnot. Like he really covers a lot of ground. How are you today, Lars? Great.
Morning. Yeah, thanks. Fine. Thanks for inviting me. Glad to be here today.
Yeah. So as I was saying, like you've been the founder of whentotrade.com. Previously, you also ran a different website, I believe, and you have been exclusively dedicated to time-based cycle analysis. You're also the author of a book in Amazon that is available called Decoding the Hidden Market Rhythm, Dynamic Cycles, a dynamic approach to identify trade cycles that influence financial markets. Probably the longest title I've ever had to read. But
sorry for that.
Yeah, it's quite self-explanatory once you go through the whole title. So yeah, it's great having you on board today. We're gonna have a conversation, definitely. You know, you guessed it, time cycle analysis, and the slight twist that Lars has given to the whole notion of cycle analysis by applying dynamism into the mix as opposed to the static study of cycle analysis. Myself and Terry, we've been users of his website, the Cycle Scanner, for a number of months, and I have to say that especially Terry, he's been a heavy user. He's made an amazing, it's been transformational for him in terms of learning and having a proper read of the market. So Lars, I'd like to ask you, first and foremost, give us a bit of a sense of what your journey has been like, the background, so that people can get a bit of a perspective on what you stand for and what's been your journey so far.
Yeah, sure. Thanks. I mean, first of all, from the poor inner, I'm an engineer. I'm a software developer and engineer. So that's where I'm coming from. So I've developed software and algorithms starting with the Commodore 65 for over 20 years now. So I'm really one of the early guys starting just coding and having fun on coding. So for me, coding, engineering, software development is a kind of fun. So that's what I'm doing since I'm born, to say it this way. And then I became interested for sure in the stock markets, not in the first run in regards to trading or short-term trading. It's more how the stock market works. So providing capital to companies and then invest companies, and then the main purpose is then you get dividends from the companies from their profit. So and then if you know this stuff, then the next topic is about trading stocks and based on which decisions should be used for these trading decisions. And based on my engineering knowledge, which I gathered over the time, and I think I was 14, 15 years old at that point in time. Two paths have been evolved. One path was from my engineering perspective. I was coding software detecting waves, cycles in audio signals. So cycle detection is anyhow, even today in our smartphones, wave analysis, digital signal processing is happening as we speak here inside all the chips here. And I did this in the early days of digital signal processing with the analog telephone devices where you had these buttons to press and there was this beep, 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 beep sounds. And these sounds have been used on the other end to identify which number was pressed. And this was cycle detection. So I started to code these algorithms from a complete different purpose. So I really know about everything from the engineering perspective, what algorithms are there. And the purpose is, it's noisy. It's a noisy signal. You know, these old analog telephone lines, you have short data. You have just a second of data. It's very noisy. And on the other side, I was then interested in the stock market anyhow. And then I started to combine both knowledge areas. Yeah, I said, okay, I think anyhow in our world, everything runs in cyclic behavior, is influenced by cycles. I can't speak, because this might be another subject. What is causing this cyclic behavior, I don't know. But as an engineer, I'm just interested, let's detect the cycles wherever they are coming from. I don't care. So and then I use the engineering algorithms and just apply them to stock market data. So this was 20 years ago. So and then this story started where we are now. I mean, it's a long road, but that was the starting point 20 years ago.
Yeah, and something that I've been telling Terry quite with a lot of enthusiasm is that I don't know the origins of why markets are actually acting the way they do, but there is certainly a pattern recognition that you can identify through all these cycles, and that applies to nature, applies to weather conditions, apply to pretty much everything. And as humans, if you think about it, our body, the composition of it is mostly liquid, right? And it is often said that the lunar cycles also influence our mood, our emotions, how we react to certain market conditions. So to me, it kind of makes sense that that's going to also be altering these cycles, maybe altering emotions, how people behave in the markets. And since the markets is such an statistically, mathematically oriented endeavor, to me it really makes a lot of sense that someone with such a very robust scientific background can put finally together a software in which the cumbersome is a very easy solution, and that kind of like it eliminates the cumbersomeness of having to conduct all these studies manually yourself. And I think that to me has been the greatest revelation of your software. You make it easy for someone from any walk of life to actually come to your website and identify, okay, in terms of length, in terms of bar length, in terms of what has been happening with objective data. And on top of that, what is even more important, like if you dive into websites into charting platforms like MotiveWave, it is very easy to draw and juxtapose a cycle highlighter, and understand how accurate the cycles have been in recent times.
Yeah, and glad you mentioned that, because that was a topic I also discovered, because once I wanted to combine these techniques, I found out that there is no easy approach, method, tool available. So for the simple user, because I said, cycle analysis is so important in every field of our world, and therefore also in the stock market. But there is no easy way to do it. And then I recognized that there is a missing link, because all the engineering stuff cannot be understood by the normal user, because it's so mathematical, it's algorithm oriented. Even if you want to read a paper, you don't know what's the takeaway. So it's really hard for someone who is not in this engineering to transfer it over to another area. And that is now because I didn't want it to write a product to sell it. I developed this on my own, because I saw there is this missing link. There is no software. It's not easy to use. It's so complicated if you want to start it. And that was the starting point. I developed this kind of algorithm in the back, but I wanted to make it as easy as possible for the normal user. And even for me, I just wanted to apply it to a chart. And then I don't even want to talk about phase and all these strange content you go with. I want to make it easy. So phase means, okay, where is it aligned from the top to the bottom? This is want to see where's the next top and bottom. And it's not the phase. I mean, the engineer talks about phase. From a trader, we just talk about when is the next top or low expected to come in the composite. So I made this transfer easy, and that was my purpose also, to allow others to make it as easy as possible.
Exactly. And on top of that, not only you provided the tools that would be making it way easier for everybody else, but also that dynamic component. Like if you actually think about period validity, there's going to be data series that are going to be a slight variation in that data series is going to lead to a major disparity if you don't account for dynamic cycles.
Yeah, and I think this is then the additional topic which I would say I put onto the body of knowledge. I mean, cycle analysis, I was one, in this area. There have been Hurst, there have been Dewey. So there are a lot of people in the past who started this road without digital signal processing. So this is what they did really. So it's really interesting. So now we have the computer power, and then I discovered everything you do on past data and even cycle analysis assumes it's a static theoretical cycle continuing in the statical shape endless, and that's not the reality. I mean, we know there is not this classical move in the future, and this is what was not really well developed at that or 20 years ago. So and then I found out every cycle analysis you do on the past looks more or less perfect. And then putting the static projection into the future, in more than 50%, it will fail all the time. And the reason is the cycles are often there, but they vary. So the length and the phase is slightly shifting around. It's like your heartbeat. I mean, you say if we're sitting here, we have a heartbeat about 80 beats a minute, but maybe then it's 89 or 79, but it's a stable heart rhythm. So even though it's not exactly one beat per minute, but if you do a projection into the future, it's important if you use 89, 79, or 85. So therefore, you need to know what's the deviation, or maybe an hour ago it was 75, but now I'm in the session and now it goes more close to 80. So you want to know what's the current state of the shift of the cycle, and this is what I tried to develop on top of the classic cycle analysis, and that's important for trading. So now we come more close into the trading area, because engineering is not helping there, because they assume even in our audio processing, it's just a static cycle. But in trading and stock markets, not static. And you need to have a chance to detect the dynamic behavior of the cycle and readjust your current projection while you go. Like you do if you're driving your car with a navigation system, it constantly monitors the traffic ahead of you in the past, the average you have processed with your car, and then it adjusts the estimated time of arrival. It's adjusted every minute while you're driving. So, and that's the same with the dynamic cycle. It monitors the current market behavior, and the projection might change from time to time. So that's the purpose of the dynamics of cycles.
Yeah, phenomenal. Great explanation. And like, how long have you been providing these cycle tools for traders? Has it been more than a decade? Has it been in the recent 5 years?
So, I mean, I started with the beginning more than 20 years ago. So and I think it was, 2005, so 15 years ago. As I said, I did this for my own, and then I shared this finding in a smaller community with some traders and experts, and they told me, you need to make this public. There will be so much people who are interested. And I said, I don't want to make it public. It's just, do you really think someone is interested in this hard stuff here? Yes, you should. And then I started to write the book. So this was the first point in time, because, before I put anything somewhere, I need to explain what I did. And the book was published, I think the first version 2009, so 12 years ago. So this was the point where I really wrote down everything, made the book available, and then with the software. So the pure algorithm, and has not changed since that, the pure cycle detection. I mean, I've added a lot of additional topics, make it easy in different software suites. But it's there for 12 years now. Fantastic.
Now, do you actively trade the markets, or are you more focused in developing tools? I'm very interested about learning this question, because many people at times are just either not finding the time, or they just essentially want to be much more proactive on that development side. What's your case?
Yeah.
Where you sit?
Yeah. So I'm not a professional trader, to say this upfront. So my main business is not trading, but I am trading. But I would say it's a balanced point of view. So most of the time I'm focusing on developing and evolving this kind of software. But for sure, I'm using this and also in live trading, because otherwise you don't get the live feedback. But, and I think then this depends on every characteristics to be a successful trader. It's not about cycle detection. You need to have other competence like risk management, managing your emotions. And that's a topic I'm not the best at. I mean, I'm very honest here. So and therefore I decided maybe I'm not the best. And I know I will not be the best trader when it comes to a large amount of money on the line, because there are other disciplines, and I don't have the time to focus on all these disciplines like risk management, entry management, exit management. You need to hedge your positions, your portfolio. So, and that's a lot of stuff you need to maintain if you really do professional trading. So therefore, I'm part of a group. So we are working now in a kind of team. And I have traders which are explicitly using the cycle stuff and then focusing on trading, and I'm supporting the traders in using the tools. So this is how we work together. So I'm in the trading business, but not as an active trader on my own. I trade for myself. That's okay, but that's just my personal topic here. And then I'm part of a larger group, which then do the trading, where I don't need to care so much of the portfolio management, the hedging, the risk management, the entries and the exits. So that's the mixture.
Yeah, and I think a testament to how much you've accomplished in terms of developing tools that are going to favor and are going to serve as a entry point for traders or as complementing their strategies. I would say that as long as you get the right positive feedback from those that become your members, those that are part of the website, at the end of the day, that is also very gratifying for you. And let's just face it, at the end of the day, we just have 24 hours and we have to make lifestyle choices. And what is it that you enjoy the most? Is it coding? Is it developing? Is it having those gratification, kind of responses from people? It's like I always make the analogy that we should not be trading time for anything else. Like if on top of that, you got family, you got kids, whatever. It's like if you were to ask Warren Buffett that he is 90 years old and he is worth $80 billion, if he would be asked like, hey, would you be trading every cent of your account for being 25 years once again, then I probably think that he would be considering that as a pretty sweet deal, So time is really something that is very valuable, and so much that you can kind of cover, so much ground that you can cover. So choose your battles, pick your battles, and if that's something that you enjoy, and on top of that you make, and today, once again, through Terry's, demonstration, you will notice how much how versatile your tools can become in reading the markets. It's just like it is not a one size fits all. It can actually have a lot of different interpretations that serve different traders, for sure. That's what I've noticed.
And that's what I'm also interested in. I'm making these tools public. I even publish the code and algorithms in my book, so it's not a black box. I also make public what I'm using, and everyone could start to apply it on his own road. And I've been criticized also from some, why are you making this public? And even I've simplified versions are available on TradingView and MotiveWave, even as a starting point for free. And a lot of people ask me also from the professional area, why are you making? Don't sell your farm is then this kind of comments I get. But I think as I'm doing this for over 10 years now, I'm not here to develop something and then sell it away and make money from selling. I want to learn, and I can only learn if I get feedback from users, from real traders, what's missing. And this is then the journey of the last 5 to 10 years. As I said, the algorithm is there for 10 years and it's working, and I know it's working. But how to make it better from a user perspective, how to apply it, how to, and even my goal is then make it available for a machine, machine learning, artificial intelligence. So I think we spend lots of time analyzing these cycles, the output, the spectrum, all these kind of stuff sitting in front of the charts. And we know machines will be much better in doing this in the future.
Yeah.
So I mean, that's maybe the ultimate goal. But in between, I like to learn what do you need from a trader perspective, and that's also the software as a standalone software. It's now cloud-based. It can be used in TradingView. So and therefore I need this feedback. If I would keep everything secret and maybe just share it in my own close community, I can't evolve in the speed I can do it right now.
I find that to be a very, I guess, ethical and very diplomatic response, but one that is really, that always around give and receive, really. It's just like you share it with the community, with those that are willing to participate in your community, and then you get tons and tons of feedback. So imagine how much you can speed up your learning curve by getting hundreds, I don't know how many participants you have in your community, but like a lot of eyeballs on your tools.
Yeah.
All right. So what is next in terms of projects that may be coming up? You are constantly coming up with new findings, with new scripts in TradingView. What lies ahead?
Yeah. I think we've touched the three elements. One is detecting cycles. Second is the dynamic behavior. And the third thing is I'm working on, once you're in this cycle analysis topic, the key thing you need to learn is which cycles are not valid for projection. So it's easy to detect cycles, but it's not easy to judge. As you said, okay, there are 5 possible cycles, and in the past you can see them. Mm-hmm. Which of these 5 or 2 or 3 should I pick in my projection area? Mm-hmm. And there we need to learn and understand which cycles will fail in the future, and to work on algorithms which can help you identify which cycles you should better not use for a projection. Mm-hmm. That's thing I'm currently working on. So because this is the topic which is left to the user of the cycle tools in front of the screen. The cycle engine will provide you 5 or 2 key important cycles, and then you need to decide which one should I use. If I use a composite, should I use just the single one? Should I just use this data set, or should I also look on another data set to verify if the cycle is active? And I want to simplify this topic here. So to validate if a cycle projection can be trusted or not trusted. Normally, this is lots of experience. This is 10 or 20 years of personal usage. And then you get a feeling on your market, on your data, which cycles might be useful in using projection. That's always what I say. You need to understand the market you're in, also from the past, because then you have kind of feeling about the cyclic rhythm, the cyclic behavior of this market. But this is experience. And I want to make this also more automatic, more algorithm based, to provide this help if a cycle should be used for projections or not. So this is really a topic which I'm working on, which will solve then a missing piece in the puzzle right now.
Absolutely, that's a missing link. And if you keep providing this, I guess, revolutionary solutions that allow us to then make it easier to pick those cycles, then I think that can keep being a game changer in terms of how we can spot and identify the information that really matters to make future predictions or future projections. Now, in terms of the people, the traders, the scientists, the analysts that have been most influential in your life, would you be able to highlight 1 or 2 as being the ones that have really been the cornerstones on the work that you've produced over the years?
Yeah, I mean, not traders, but from the trading, from the cycle analysis, it's surely it's Dewey and Hurst. So these are the 2 persons who influenced or even got me interested in all the cycle analysis. They are not traders, but these 2 persons pushed the cycle also on the stock market. So they even transferred this idea to the stock market. I mean, from a trading perspective, it's more. I like the classical investment approach, to be honest. So that's what the stock market is for. So, so therefore, I'm really curious to see intraday trading works, and you can use it based on cycles. But I don't know from a economical point of view, if this is the right way on our planet to move along. So if you can make money out of money just by intraday trading, I don't know if this is the right thing to do, which will help us here living on our planet. But that's a different story.
Altogether. Yeah. Okay. So let's just keep it focused on the influential people that have been, positively affecting your life. We just cover those two names. Now, I'm interested to understand what a day in your life, what your routine looks like. Are you essentially waking up and jumping straight into developing the tools, upgrading the tools? Walk us through, please.
Yeah. So mainly I check I call it the dominant cycles in each market. This is what I'm, and more from a daily perspective. So I'm checking how the dominant cycles in the markets I'm interested in look like. So, and they don't jump, so they change slightly. This is the dynamic behavior. So normally you detect the length of, let's say, 170 days in a market, and then each day or each morning I check, because we have new data from the last day, which is coming in. So I use the latest data, which is more or less automatically done, and then I check has the length changed, has the phase, so the alignment of the last top or low changed. This is my kind of morning routine, to see where we are. And then I'm looking for, for these dominant cycles, which are the most important cycles in this market right now, where's the next projected high or low? So what's the current status quo? So, and I'm not looking into 2 years or 3 years, or you can even use it on intraday. I'm not interested in the next 2 or 3 hours. I'm just interested, when is the next turning point from this dominant cycle on the chart? And the time horizon doesn't matter. If you're daily or intraday, it's always the same. So, and if it's long ago or long into the future, then I say, okay, I don't need to do anything today. Yeah, so that's my checkpoint in the morning. So I don't need to monitor today what the market is doing, because anyhow we are in this long cycle, and maybe the next projection anyhow is end of the month.
Correct.
Or if you are in a day trading, it's maybe tomorrow or in 2 days on a 2-hour chart. There's the next signal. So then I more or less close my morning routine, and there's nothing to do, because then otherwise I would go into the risk to overtrade. Then just trade because of trading makes no sense. So I need to stick to this main cyclic routines. So, and then in the case that there is no real signal to be expected from cycles, then I go into my other business stuff, like developing or other business activities. But there might be a second situation when you see, okay, we are in this bottoming phase today. Yeah, I mean, you never know if it will happen today or tomorrow. But if you know from the dominant cycle, we are in this period right now. So then I go into the second step, and I more closely look into the markets. Normally, I drill down on the next lower time frame, because you never see it. For example, if I'm looking on the daily, I will never know from the daily cycle if it will be today or tomorrow. If you're looking at the 2-hour chart, you never know it will happen this hour or maybe in 3 hours. But now I have a closer look, and then I go to the next lower time frame to see what do the cycles tell me on the next lower time frame. So, and if I see there, okay, we get into alignment from the higher and lower time frame, then I'm more observing the markets, and then I add other confirming indicators into the mix. I would anyhow never recommend don't trade purely on cycles. But if I identify these moments in time, then my daily routine drives into more. Okay, then I go more into the markets and check the cycles on the lower time frame. That's kind of how the day starts.
Fantastic. And over the years, is there any market, any sectors, like either stocks or forex, that either you have been more heavily trading, or that you may have noticed that cycles tend to play out with more neat signals as opposed to others? Any insights, any feedback you've been receiving from traders?
Yeah, I think cycles work best, or in my experience, in the markets where there's lots of liquidity and lots of action, and not so good on individual stocks, because individual stocks are more influenced than by, from an engineer, I would say, by noise, by short-term influences, which you can't catch with cycles. So I would look for the larger indices. So this is what I'm using, and especially the indices which are driven by emotions. So, for example, in the last 3 years, there was a good chance of using cycle analysis in the cryptocurrency markets because they are heavily driven by emotions. I mean, the parabolic moves are anyhow hard to capture, but these cyclic behavior in indices which are driven by emotions. And there was a time, maybe just to add this, 2 or 3 years ago, when there was a close relation in the cryptocurrency with the crypto mining industry, which was based on heavy graphics cards usage from NVIDIA. So the mining business in the cryptocurrency needed all these computer power from the graphical processors. And we had a close sync of cycles in the NVIDIA shares and Bitcoin. And it was so fascinating because I was just seeing aligning cycles in the NVIDIA and Bitcoin, and you could trade the NVIDIA stock market based on the Bitcoin cycles to see how it will move. So I mean, they are not in sync right now, but there was a phase of, I would say, a year. It worked very well for a year, and this is what I'm looking for. So maybe as a final point in my daily routine, I'm not just looking at one data set. I try to identify 2 or 3 data sets which seem to correlate. And then I'm looking for cycles in these 2 or 3 data sets which seem to have a correlation. And then when the cycles align, this gets interesting.
Yeah, and I gotta say to the audience, for those that are watching, that actually Lars wrote a Medium article about it, and it's called Rise and Fall of a Crypto Star, How Cycles Predicted the Crash of NVIDIA, published on February the 10th, 2019. I actually came across this article and I found it fascinating. And as you were talking, I just, came across once again just to let people know, because it is true that you can only gain confidence, conviction, and the robustness in your views the moment that you see different sectors aligning with the same type of signal, time-based cycles wise. That's fascinating, and that's as a time-based cycle student or analyst or trader, it can only reinforce your views on a play or on a trade that you're looking to make. So great stuff there. Now, with that being said, we've gone for just over 30 minutes. Now it's time that at the end of the day, you are producing these tools for traders to benefit. Terry here himself is now going to be taking the floor, and he's going to be walking us through a bit of a demonstration of how he personally uses your tools through MotiveWave. Is a phenomenal, I gotta say, MotiveWave is a phenomenal charting software. And hopefully you are going to have maybe yourself some revelations as to how we can tap into your tools to make better informed decisions in our markets. So I'm going to let Terry take the floor. Let me unpin your camera, and I'm going to be pinning Terry's camera. Now, what I need you to do, Terry, is just click on sharing your screen. And the moment that I see your screen, then I'll confirm that. Remember, you have to press the up arrow that says present now. There we go. It's loading up. And let me just get that in the middle.
You see that now, can you?
Yes, we've got the chart of dollar, Swiss franc of the 12 hours. And it'll be great if you were to treat this presentation as if all of us have been living under a rock and we have no idea about what your trading style is like. So kind of give us a little bit of a summary of how you treat the markets, what cycles are to help forward. There you go.
I guess the first thing that needs to be said is that these cycles that you're seeing on here are directly taken from Lars's website, so that they're not that. Even though this is a different software package to his or to the one that he displays on his website, these cycles are taken through an API.
Correct.
What I've done that is a little bit different is that rather than just have one dominant cycle, so you can see here I'm on the 12-hour for US dollar Swiss franc, but rather than just take one dominant cycle, I've actually split it into a long-term dominant cycle, which is the red one, and a short-term dominant cycle, which is the green one. Now, I think Lars spoke about this in his first book and talked about doing that. But to me, rather than just one cycle on there, I really like using the confluence of these two cycles. So my view is that if I can see a situation like this, where the price has moved to the and is at the trough in this area here of the long-term dominant cycle, which is the red line, and also we have the short-term dominant cycle and the long-term dominant cycle coming into alignment with each other. That to me is a good time where I'd like to look at entering a trade. And so basically that's what I'm looking for, is that alignment of the long-term dominant cycle with the short-term dominant cycle. What I'm really aiming to do, which is a little different, is I'd prefer to trade, rather than trading the short-term swings, I prefer to trade these long-term swings, because I can take a position at the bottom here, like over on the left-hand side here. I'll just move that way a bit. I could take a position, for example, at the bottom here with my stop loss and my entry in place, and I could ride that position all the way to the top of this long-term dominant cycle, and not having to take into account these short-term fluctuations. So that's really the aim of what I'm trading here, is I'm trying to get onto this long-term swing in the long-term dominant cycle.
Yeah, correct. And one of the things that has been rather fascinating for me, in order to really understand what your process is like, is that you are going to be orbiting around different timescales from the 4-hour, I believe, up to the daily, and you're going to be paying attention to the cycle highlighter, the dash,
exactly,
the dash blue line in the main chart. And your main qualifier for you to really be captivated, for you to catch your attention, is going to be whether or not the cycle highlighter is going to be in alignment with that long-term cycle. Not you're going to be, for the most part, disregarding the short-term dominant cycle when it comes to the cycle highlighter. You're only going to be paying attention to how confluent that cycle highlighter it has been in the past, and that would be a testament of how reliable this cycle has been and can be heading into the future. Can you elaborate on that?
Yes, I can. So this is what I've been looking at. Because it's the long-term dominant cycle, the red line, that I'm actually trying to trade. I obviously want, I guess, firstly, my understanding of this short-term cycle, and Lars may correct me here, my understanding of the cycle highlighter is that's pretty much the cycle that's been detected in play on this chart. And the red line is a true sine wave that's been overlaid over the top of that to give us a projection, so we can have a projection into the future. The cycle highlighter, you can see there, it stops just there. It can't be projected into the future, but we can overlay it with this sine wave, and that sine wave we can actually project into the future.
You can
have I got that right, Lars?
You can admit yourself, Lars, and just share your take.
Yeah, sure. That's absolutely right, Terry. And I think this is already one method to detect if you can trust this cycle, because it provides you the measure of the real price behavior, which is not as theoretical as a sine wave, as always. So that's where you see the dotted line shows you, is there this cyclic behavior in the real price? This is the dotted line. And then this is overlaid with how the theoretical cycle would look like. And if they are both in close alignment, then you have already one method of identifying if you could trust this cycle. So that's a visual way of validating the cycle. But Terry did it exactly as designed, right?
Yeah, spot on.
Fantastic. Excellent. Yeah. Oh, thanks for that. That's great. That's good to know. And so what I'm looking for then is, which time frame should I trade this on? So every Sunday before the trading week starts, what I'll do is I'll go through the time frames I'm interested in trading are the 4-hour, the 8-hour, or the 12-hour. I'm not interested in going lower, because I don't want to be looking at charts every 2 hours.
Yeah.
I'm happy to just have a look on a 4-hour, an 8-hour, a 12-hour time frame. And so what I'm looking for is, this one you can see is the 12-hour. I'm looking for the peaks of the dotted blue line being roughly in alignment with the long-term dominant cycle, which is the red line. And you can see here quite clearly that we've got a pretty good alignment of the cycle highlighter, which is the light blue dotted line, with the red line, which is the long-term dominant cycle. And that says to me that the 12-hour on this chart is good for trading. Now, if they don't align with each other, what I do then is I'll try the 8-hour and I'll try the 4-hour until I find one that actually lines up better. And I'm just bringing up the 8 hour here now. You can see the 8 hour, the alignment is nowhere near as good. Hopefully you can see that there quite clearly, the dotted blue line and the red line, but you can see that the 8 hour is nowhere near as good as the 12 hour, which lines up better.
Lars would like to intervene 1 second, if you don't mind.
No, I just wanted to second what Terry said. I think this is one of the most important procedures, that you find a way to validate if you can trust this cycle or not. So I tried to explain it a little bit in my introduction, and this is now live on the chart. So so therefore I like what Terry said, because often I see people just clicking this indicator on the chart and following this theoretical line projected into your future without any knowledge about, should I do this, or maybe should I not trust this? And Terry explained it now. This is exactly one way where you should see, maybe I should not follow the projection because there was no match in the past. And this is so underestimated because this is, I mean, the cycle will be detected just by a click with a tool. But how's the story? A fool with the tools still stays a fool. So the tool is not everything. You need to have this knowledge, what Terry just explained. But sorry, I just wanted to second that this was a very important topic.
I don't apologise, Lars. That's great. It's great to have you adding your expert knowledge to it. It's really good. All right, so effectively then, every Sunday I go through my trading, the pairs that I'm interested in trading. You can see them listed on the side here, and I determine which time frame according to how closely they match this cycle highlighter. And then I just simply mark them in different colours. So the orange, for example, is the 8 hour, the red is the 4 hour, and the mauve colour is the 12 hour. So these are the ones that match the cycle highlighter the best.
Yeah, and I'm very interested now that we have these responses coming from the horse's mouth, from the inventor, from the creator. Like, how do you calculate and draw this cycle highlighter in the main chart? Like, how do you go about plotting this on the chart? That's something that I've always been a bit of like scratching my head around it. Lars, the cycle highlighter.
Yeah, the cycle highlighter is just based on the price data. So it's extracting the cycle length has been detected by the digital signal processing and the red line. And this is just, it's a filter on the price data applied. And then just it results in this plot.
At times I'm trying to correlate that cycle highlighter with the previous price data, and it doesn't seem to actually be like a one-to-one replica of the price versus the cycle highlighter. Maybe it's just because there might be some length that there's a disparity on the length or something, but yeah, that's what I've been scratching my head around a little bit. Go on.
If you see this behavior, if you don't see it's aligning with the price, then this cycle is not there in the price series. So there might be also the situations when the cycle highlighter flattens out, or it's like a flat line. This tells you that this cycle is not there in the real price series. So this is that's why it's not matching the overall price. It does if the cycle is there, as seen here by Terry's chart. But if it's flat, it just tells you this cycle is not there in the real price series.
Got it.
Okay, interesting.
Yeah. Is there any follow-up question regarding the cycle highlighter, Terry, that you'd like to ask? Because we've definitely gone back and forth a few times trying to discuss and get the best, I guess, knowledge as to how that gets calculated and plotted in the chart. I guess that this is your time. This is your time to...
Yeah, most definitely. Yeah, look, for me, the cycle highlighter is probably the biggest unknown factor. And my assumption, just from reading your work, Lars, was that it was pretty much, my interpretation was, it was the cycle that had been detected. Now, clearly, it's not a perfect sine wave because none of the cycles are perfect sine waves, but that was my interpretation. Would that be correct?
Yeah, it is. And if you're interested in getting more background on the cycle highlighter, and to be honest, this was first invented by Brian Millard, and there's a book out there, and I think a contribution to J.M. Hurst written by Brian Millard. So if you just search for Brian Millard and Hurst, you will find the book of Brian Millard, a contribution to J.M. Hurst works. And the idea of the cycle highlighter was first invented by Brian Millard. And in this book, he explains all the background of
I think
the cycle.
The book is called Channels and Cycles, a tribute to J.M. Hurst.
Yes, exactly. That's the book. And there's also, I think, a chapter on the cycle highlighter alone. And as you see, I'm trying to combine the methods invented by Hurst, Millard, and adding now the digital signal processing. I mean, otherwise everything is said about the cycle highlighter. I think we would crush the time, go more to detail. So therefore, I just recommend the book.
Fantastic, yeah. And I will share this book with all the audience, and I'll be providing a link down below in the description box. Now, Terry, this week, let's just keep advancing. This week, you have detected a bunch of pairs that you're looking to monitor. Have you put on some trades so far this week? Are you on some?
Yeah. No, this week's been very quiet. There's not much that has appealed to me this week, so I haven't taken on any trades, and I haven't put anything on at the moment. But I am watching the chart, and there are a couple that I'm looking at, and this was clearly one of them that I was interested in. Because the other point, I guess, that I should make is that Lars talked about how he does pretty much what's called top-down analysis, where he starts on the daily and he finds a cycle that he believes is there and consistent on the daily, and he would then zoom in on the lower time frames to try and get a better entry point on the trade. And my trading style is effectively done from bottom up. So it is a bit different in that regard, in that I would start on the lower time frame, like I've done here on the 12-hour, and then I would go up to the daily. So, for example, I did mention to you before that ideally what I'm looking to do is to find an entry signal around this area where I'm at the trough of that long-term red dominant cycle. And I'm looking to try and get an entry there, and I'm looking to try and get an exit when we get to this point, or the peak of the long-term dominant cycle. And I use one of Lars's tools here, the cyclic RSI. So I use that as well to help me gain that. Plus I'm using price structure, so a break of price structure. And you can see that right there was a nice break of price structure on that candle, and that could possibly be an entry with a stop just below that level, and then to trade that and hopefully get out up in this area somewhere. But the point I was making, I've lost track a bit there, but the point I was making is I'm not just using the 12-hour time frame. I will then also look for confirmation on every single trade I take on the daily time frame. And so I'll go up to the daily, and what I'm looking for on the daily is I'm looking for confirmation here that this is also suggesting that the price is likely to be going up. And you can see on the daily, the short-term dominant cycle is rising, and certainly at that entry that I just mentioned, the short-term dominant cycle was rising and the long-term dominant cycle was rising. So at that point there, I would have been interested on the 12-hour time frame in taking this trade at this point here, because we've got the 12-hour, everything in a line, and the daily, we've got everything in alignment as well. And as I said, then I'd be looking to hold that position all the way up until this area here, when I'd be looking for signs in the price structure that this was over, and I'd start getting cautious. And as Lars mentioned, when I'm looking at these charts, this goes from about June the 17th all the way up to when I'd start getting concerned in around this sort of area, July the 29th. So I don't need to worry much about this trade. Perhaps I would look at shifting stops up underneath and trailing some stops, but I don't need to worry much about this trade and getting out of it until we start getting up into this area. And so I can look at the charts in the morning and say, no, there's nothing there for me to think about today, and I can leave that go until 2 weeks' time or 3 weeks' time.
Yeah, and it's also important that you don't fall into the trap of analysis by paralysis. So if your 12-hour is communicating that there is a long signal and that gets to have the backing of the daily, there's always going to be a case for this chart to be bearish if you keep lowering your drilling down into the 6 hours or into the 8 hour. So that's why it's also important to stick into a combination of timeframes that make sense from a cycle highlighter perspective. And then if there's enough conversions, at the end of the day, one single outcome is always going to be a rather random event, and it's more about the probabilistic mindset that you have to apply over a large sample of trades. But essentially, there is that edge that you can exploit through this convergence of cycles, kind of like my contribution on top of what you just said. And so earlier today, Terry, you mentioned about Bitcoin, and perhaps we can look real quick into BTC ahead of the top of the hour when Lars is going to have to wrap it up. So you said that short-term dangers.
Yes, I did mention that. But can I say first to Lars that these cycles that are produced by your software are just fantastic. I mean, they picked the bottoms in Bitcoin. I picked those on this particular occasion here, 2 or 3 weeks before they actually occurred. It's just like literally like magic. It was absolutely phenomenal.
Yeah. It's been rather reliable in cryptos. As he said, it tends to be a rather emotionally charged space. And that seems to be very well translated through all this cyclicality that we get to detect through his extraordinary tools. Yeah.
Yeah.
So, take it away.
Now,
what do you see in BTC this time
around? The reason for my comments this morning that I felt that Bitcoin was at a danger period was that, firstly, we had been through this period here where we had reached the trough, and we should have seen upward pressure, particularly at this point. We did see a bit upward pressure on the Bitcoin price. And theoretically, we should be seeing upward pressure on the Bitcoin price all the way up to this peak. But you can see that Bitcoin has failed to do that. So even though my cycle analysis says Bitcoin should actually be rising in price to a peak, we don't know where that peak's going to be. It could be there, or up in the sky somewhere. Yeah. We don't know where it's going to be. But Bitcoin had failed to actually rise with the cycle. So that was the first warning sign for me. And then the second one is that we are now heading towards the peak of the long-term dominant cycle. We still have this little bit left here, which I think could provide some support. But once we hit that point there, which is about the 16th of July, then I certainly see that we will start to see some downward pressure on the Bitcoin price.
Let me just point out that the 4-hour time scale in BTC US dollar has been exceptional to pinpoint the turning points in the market. Like if you were to zoom out this chart and we can start to look at the cycle highlighter from a bit more of an eagle view, you'll notice that there's been some great turning points that have been spotted by this cycle highlighter. Like as of late, I checked that and it was quite accurate. So
yes, the cycle highlighter has been really good, and the analysis has been really good. It has changed a bit, and Lars can confirm for me here perhaps that. I mean, what I had noticed, Lars, was that if I went to the 4-hour and looked at this long-term dominant cycle, it was in fact, if I went to the daily, it was in fact the short-term dominant cycle on the daily. They were one and the same. I don't know if you see that often, Lars?
Yeah, but if you go back to the 4-hour chart, because I think your observation is right, and what I just want to add to that is once we approach the cycle bottom down July 4th, somewhere there, and what you mentioned, this bottom was projected even before it arrived. So we have been seeing this of time anyhow. But what happened now is, so we had the sharp down move into this area and this point in time exactly. And then the other cycle suggested that it should be a larger upswing, what you mentioned. But in this case, it stopped the downtrend. So yes. I would say it's more now, we are in a sideways phase for Bitcoin. I mean, slightly down, but at least, and this is valid because cycles, this is, you need to understand, is a detrended view of the markets. If this is the risk we might see, Terry, you're right. If we are now in a sharper downtrend, which starts in mid-June, downtrend leg started and it was stopped by this uptrend cycle, it just means this downtrend pauses now. And this might result in the sideways behavior, what we see in the market. And the downtrend might resume exactly there, July 18th, where the cross is right now. So this is also a valid way to read the cycles. If you see a sharp up move like here from a detrended view, it means in a downtrend, we see a sideways. I mean, Bitcoin is not in an overall downtrend, but just from this, for our point of view, if the trend has shifted, this will be an important time to watch out for, Terry. And this is the morning routine. If you see this, you should be very cautious approaching now mid-July or it's these days. So end of this week, beginning of next week. If this turns out, there might be another sharp down move to be expected in Bitcoin, right?
Exactly, and that was the post that I made this morning, that I think the potential is there, particularly, maybe not just yet, but particularly from this point on. And of course, these aren't dead accurate. I mean, you've got to give a bit of leeway here, but I think we're at a danger point with Bitcoin, and the potential is there based on chart structure for us to see. I hope we don't. But the potential is there for us to see a decline even down to the low 20,000s, because there isn't much now between where we are now and $21,000 in around that area. That area has very little activity in it, so it could quite easily fall down to that level, to the point that I'm ready to buy if that does happen. So I've moved some funds around to be ready to make a purchase in case this does occur. So I'm hoping it doesn't, but I'm probably 50-50.
Yeah. So we've
yeah,
got
and
go ahead. Sorry.
Maybe just said this is the purpose of cycles. It shows you a probability what could happen in the future. It does not mean that this will happen, but it's a probability, and you are prepared to look out for that. I mean, you should not trade the cycle, trade price and do your risk management, your position management, and your entry and exit management. But this look ahead based on time, you need this in the trading environment. This is not everything, but this is what cycles provide you, a probability, what could happen at this point in time. And this is the morning routine or your daily routine, whatever time frame you're looking at. Cycles will not tell you how high or high low the next push will be, because it's not a price projection, but it's a probability in regards to timing.
Yeah, fantastic, Lars. That's exactly how I feel. I mean, I've never been in a situation before where I felt I could, with a reasonable level of confidence, say what is likely to happen in the next week or two. And your cycle analysis or your cycle tools have given me that confidence to be able to make those sorts of predictions into the future with some degree of accuracy, or with a reasonably good degree of accuracy. It's been fantastic.
Yeah. So Terry, now let me ask you. Actually, I just cut you in the middle. You wanted to give a bit of a feedback, Lars?
No, I'm right.
Okay, perfect. So, Terry, you've been an experienced user of MotiveWave now for a number of weeks, if not months. What else could Lars deliver in this charting software that would make your game be taken yet to another level? Is there anything that you feel is missing that you would benefit even more?
I could say there's an update to the tool I showed you at the bottom there that Lars has done for TradingView that I would love to see in MotiveWave. Hang on, I'll just bring that up again. Okay. But I'm sure Lars knows what I'm talking about, which is there's been an update to this.
Right.
And there's also been, I think, Lars, where the ability to apply the composite wave to the actual platform as well.
Right, interesting.
Yeah. Maybe as you're speaking about what's happening. So my main focus to support other tool sets are currently TradingView and MotiveWave, because I've started also with other software tools, TradeStation, NinjaTrader, MetaTrader, you name it. But I think the best ones now to follow up are MotiveWave and TradingView, because these are the most easiest ones to continue. And even MotiveWave offers a live Java implementations. So therefore, I'm focusing on these two right now, and therefore you see new updates showing up even in a weekly fashion on TradingView. But what you will see in TradingView will also come in MotiveWave. So this is the multi-time frame version of this indicator, because the signals, and this is what will also show up in MotiveWave, is that you don't only see one time frame here with this indicator. You can have a multi-time frame indicator with this, also monitoring the larger time frame, and then just trust the signals when they are in alignment on both time frames. And you don't need to switch between the time frames in the bottom row. So you just see it what's happening in the larger time frame. Also, that's in the making. It's not final released, but this will also show up for MotiveWave.
Great.
Am I correct in saying, Lars, that the primary difference between a user wanting to use TradingView as opposed to one that's going to use MotiveWave is that in TradingView you are unable to project these waves into the future? Is that correct?
Yes. I have more options in MotiveWave. So MotiveWave also allows me to, I think you could call it the CRZ auto is down below. So this automatically detects the dominant cycle and adjusts to the dynamic behavior. This is what is not possible in TradingView, because TradingView does not allow me to really use the API technology and reach out to the signal engines. So therefore, it's limited to TradingView. MotiveWave, the auto detection of the cycles and the projection into the future is more or less only possible in MotiveWave.
Fantastic.
Yeah, and we've got I know you got a hard stop, maybe just go 2-3 minutes and then we wrap it up, because we got a couple of questions. So Ivan is asking, awesome, what does or how often the major cycles usually change? Is it random or during a major event? Maybe either Terry or yourself, Lars, he's asking, when does or how often the major cycles usually change? Is it random or during a major event?
I mean, there's no simple answer to that, but in general, it's not changing often. So you would see what does change. For example, the longer term, we see here the red one. I don't know. It's 80 or 90 in length. So what happens often is that you would see a change from 89 to 90 to 91. So there are small shifts very often, but they don't change the overall projection at all. That's always what I say. I see critical users say, it's changed every day. But I say, yeah, it's just changing between 89, 90, and 91. And look at the projection. The low will still be in August 2021. If you use 89 or 91, and the phase is also there. So so even you see small changes happening often, the overall projection in general will stay stable. And if this is not the case, there might also be situations when there are huge shifts. So not 89 to 91, then 20, then it's 90, then it's 150, then the other day. Then you should also just not trust it. Then there is no stable cycle in there. So if you see random heavy shifts in the cycle, then you should not trust any cycle in this market. Then this data set is not driven by cycles. So this is also a kind of lessons learned. If you see stable small shifts, then you can more trust it.
Correct. And the last question is, can we see, and this goes to you, Terry, maybe you can provide an example. Roger is asking, can we see an example of flat cycle highlighter and how it compares to price in that period? Can you think of an example where...
What were we talking about? A flat cycle highlighter?
Yeah, that's what he's asking. Can we see an example of a flat cycle highlighter and how it compares to price in that period?
I don't know whether I could find a flat cycle highlighter. I'd have to go searching for one.
Yeah, I haven't really come across that many. Like
No, I've never come across a flat one. I've certainly come across cycle highlighters that don't line up very well with the peaks and troughs.
Yeah.
But I've never come across a flat cycle highlighter. I don't know, Lars. Do they? I assume they can exist, but
Yeah,
I don't
that's not often the case. It's just then when the theoretical cycle is not there in the price. What you see here is and the alignments on tops of bottom with the cycle highlighter shows you if you also have a phase alignment. Yeah, you see the swings in this example here. The swings are there, so the cycle is in the price series. You see just the tops are slightly off from the price and the theoretical cycle that shows you in this cycle. The cycle from the length is confirmed in the price series. You just have shifts in the tops and bottoms. So this is what the highlighter here shows you.
Excellent. So we've come to the end of the show. Today we had the privilege of interviewing and going through the charts with both Lars and Terry. It's been a pleasure, Lars, having you on board. It really is great to pick your brain on all these new tools that you keep developing. Thank you. We're going to be sharing this video with the audience, with Global Prime clients, the thousands of them that we've got, and hopefully more and more people get to be interested in the tools that you have been developing over the years. I'm going to be sharing the link down to your Medium where you talk about the NVIDIA case example. We're also going to be sharing the link to the Channels and Cycles book available in Amazon, a tribute to Hearst, and also the link to whentotrade.com is going to be available down in the description box. Lars, any final closing words from your side?
Thanks for being with you today. So it's always a pleasure to have kind of chat and interactive discussions on cycles. So I'm happy to see the community is growing. Thanks, Terry, for putting this into practice. And I'm very glad to see that this helps you in your daily routine. So just thanks for the session.
Thanks so much, Lars. It's been an absolute pleasure chatting with you, mate. Really good.
Yeah, absolutely. Yeah, he was really stoked the moment that I confirmed that you would be coming on board. So I know that we made Terry's day today by you participating. Thank you, Lars. I appreciate. Now is your hard stop. We've reached your hard stop, so it's time to go, I guess. Thank you.
Thank you, guys.
Thank you.
Bye.
Bye.
Thanks. See ya.
Bye bye.